We begin the second week of April after what really was a very dynamic week last week with the jobs reports and the tariff announcement. And we saw rates go to their lowest since October of 2024. And really, Friday, by the end of the week, we had dropped a quarter point in interest rates across the board. But really, on Friday, they were even lower. But then by the end of the day, all the gains from the day were gone. And the big reason, well, there's really three. One, this jobs report, which came out on Friday, was actually really strong. And then two, Vietnam basically said that they would lower their tariffs on the US, which is kind of proof that what President Trump is doing is going to work. So if everyone, once they stop pounding their chest, starts to work together, and it kind of lowers and makes these tariffs reciprocal, then that was a good decision. And the drop in the stock market and the drop in mortgage rates might be temporary. But the third reason was Fed Chair Powell basically saying, hey, you know what, we're concerned about inflation and the impact of tariff on inflation. Instead of saying, you know what, we might actually lower the Fed funds rate 5 times, which is what they were saying on Thursday. Now we're back to maybe 2 to 3 times for the rest of the year. So let's get into the rates as we begin the week. What we saw, 6.6 to 6.75 for the 30-year conventional fixed rate loans. And VA, we got down to 6%, again, lowest since October of 2024, but they went up a little bit towards the end of the day, but still overall, really good week last week. Where will we go this week? What is going to happen this week in the market that is going to move rates? Well, you have a little bit of the smoke from the tariff action and anything that happened in the news over the weekend. But really, what is going to affect interest rates this week? It's the first inflation reports of the month, really. Not much on Monday. There's a consumer credit report coming out. You got the 3-year Treasury note auction, the 10-year Treasury auction on Wednesday. The Fed Open Market Committee, Fed meeting minutes that get released from last month, which will be big news, but I don't think there's really going to move the needle too much because much of what happened with tariffs and whatnot happened after the Fed meeting. Thursday is where the fireworks begin for the week, and that's where we'll see most of the movement. We have the Consumer Price Index, which is another inflation report, the price of goods for consumers, the James and Joes, the Larrys, and all of us out there. We get that. And then on Friday, we have the Producer Price Index, which is the wholesale inflation report coming out on Friday. That's going to move the market, but not quite as much as the Consumer Price Index, which comes out on Thursday. We also, on Thursday, we have initial claims and initial jobless claims, continuing jobless claims. And then also on Friday, University of Michigan Consumer Sentiment Index, which quite frankly will probably be pretty low, which might help interest rates come down a little bit. So it could be a good week towards the end of the week. If inflation shows that it is going up, we'll see probably rates get back to the 6.25. But if we get a good inflation report, we'll see interest rates come down maybe into the high 5s. And again, these aren't my rates specifically. These are rates really across the board. Remember to stay tuned. For those of you who are still wondering, should I wait for rates to come down farther before I start looking at a home? And I got a really important video that you need to watch. Stay tuned and pay attention to my channel. All right, have a great week. All right, aloha.